Hello, everybody. This is Chuck Carnevale, co-founder of FastGraphs, the fundamentals analyzer software tool, aka Mr. Valuation, bringing you another Lessons in Valuation subscriber request series 2-minute drill. And again, these are high-level videos where I'm just going to basically introduce the company and show it from a standpoint of how the business looks relative to what we see on a FastGraph, which is the fundamentals analyzer software tool. Now, one of the most requested stocks I've been asked to look at here recently has been Intel. And Intel is a very interesting technology stock from the point of view that I believe it's been living mostly off of its reputation because things have changed dramatically for the company. Let's go ahead and go into the fast graphs and see what I'm talking about. As you can see here by this plotting of the company's adjusted operating earnings, Intel has always been somewhat cyclical, where it had periods of growth and then periods where earnings were falling. We had this period here where earnings fell, rose, and fell for a couple years. But recently, we've seen earnings literally fall off a cliff to the whole extent of basically impacting their dividend and everything else. So the lesson in valuation here is once I put weekly closing prices on the stock, I see that prices still track earnings like they normally do with all the accompanying volatility that you would expect in the short run. But in the long run, the direction of stock price goes where the company goes. But we've had this huge drop in value, and it's really a function of a big drop in fundamentals. So I do want to make that clear. This is not, as the old saying goes, your grandfather's Intel. This is a company that's lost its edge, apparently. Now, there are some positives. It does only have 31% debt. It's still considered an investment-grade company. But again, what it looks like going forward is interesting because analysts are expecting it to resume growth. But now these large growth numbers can be very misleading in a case like this because what you're looking at is a company that's basically coming off of this big collapse in earnings. So some of these numbers look attractive in terms of percentages, but keep in mind they're not even getting close to what the company was once earning back in the 2017, 18, 19, and 20 and 21. Earnings have fallen and collapsed, and we're only expecting 50 cents a share in 2025 and 2024. So the analyst estimates have, especially in the more recent years, the analysts have missed. They used to be able to forecast this company pretty well, but that seems to have changed. So I don't think Intel is worthy of investing now. I think it's a speculation. Can the company return to its past glories or not is a major question. It would take a lot of research and due diligence to figure that out. Anyway, that's what I've got on Intel for you today. So this is Chuck Carnevale. Hope you enjoyed the video. Intel is not, again, the same old Intel that we've known for the last several decades. So take that, keep that in mind. If you like the video, give me a like, ring the bell, subscribe to the YouTube channel, and take a look at subscribing to FastGraphs. It really is a great tool that keeps you grounded on the business behind the stock price and also gives you insights into why stock prices move the way they do. Thanks for watching.